The phrase of the last few months has been, "Where's the pricing floor?" But unlike a Wendy's commercial from 1984, I do not have a crack team of octogenarians assisting me in finding the remnants of a burger patty. In freight, though, historically, finding things is tricky, and spot market pricing floors can often be found long after they are gone, unfortunately. But the good news is, with new technologies and data sets, we may finally find this metaphorical freight Shangri-La. But folks, what does it look like, and how does it change people's behaviors? Well, we're going to find out in this episode of Loaded and Rolling. Welcome to Loaded and Rolling, folks. I'm your host, Thomas Wasson. Now, the freight business cycle typically can be described as the world's most stressful roller coaster, depending upon where you're at. For example, for brokers, periods of relative calm can cause stress, but for shippers, this predictability is a welcome reprieve. For carriers, for example, upwards movement and high truckload demand provides a welcome boon compared to scrounging for scraps when the demand for that same amount of trucks dries up. But what has always fascinated me most is that while we can guarantee the freight supply-demand dynamic is cyclical, predicting when the turns occur and where you're at is surprisingly challenging. Now, to find this out, we'll ask some folks who are in the freight trenches daily to see if we're still in Verdun or if an armistice on downward spot rates may be on the horizon. To help me suss out where we're at and where we may be going is Justin Mays, Director of Operations Carrier Management at Transfix. Welcome, Justin.
Thanks for having me, Thomas. Glad to have this talk with you today.
Happy to have you on the show. I was thinking when I was writing this up, I always remember that commercial, like, where's the beef? And I was like, where's this pricing bottom? Because everyone's talking about it right now. You know, being a broker, Transfix is a digital freight broker. For folks just catching into what's going on in supply chain, what are we currently looking at? What's the situation?
I mean, we've been in a weak market for over a year now. I mean, Easter kind of marked that year period. And to be quite honest, there is no crystal ball that's telling us where that floor is going to be. We've been at the same time throughout the pandemic, when rates were extremely volatile and climbing, we were asking the same question: where is the peak of rates? And to be quite honest, Thomas, there is no crystal ball, like I said, but I do believe that over the next 8 to 12 weeks, we will reach that bottom. But more importantly, I believe in the next 4 weeks, we'll start being able to see telling signs of specific lanes or even markets that have hit the floor. And I want to make sure everyone's well aware. When we say hit the floor, it doesn't mean rates are going to just jump right back up. Demand's going to continue to be weak with a lot of capacity out on the road right now. So all because they hit the floor, it doesn't mean they're going straight back up.
It's always fun to tell people that. Everyone's asking, okay, well, what happens when it hits the bottom? I'm telling them, well, it's still bad if you're a carrier or if you're a broker. It's not, we're just in a period where hopefully it gets slightly less worse. And so let's approach it from as a broker first, because I know a lot of folks, I speak to a lot of drivers, I don't understand what goes on behind the scenes here. I was lucky enough to be a broker for a little while. When this situation happens and we hit the floor, what are the things that you all are looking at as well strategically? What are kind of the big things, either looking at carriers and customers, that you got to keep it aware of before you start bouncing back up?
Yeah, I'll say number one, it's definitely acquiring the freight. It's making sure that you're in the position to go out and acquire the freight. And by understanding the market dynamics and where it's heading, it'll give you the upper hand and making sure that you're acquiring the right freight. Secondly, you got to make sure that you're aligned with your carrier base. You cannot be going out and getting freight that does not fit your carrier base and is unsuitable for you to continue to service in the coming months. Overall, though, again, right now, I think as a broker, your number one priority is going out and getting that freight, because it is not easy right now. We went through a year of repricing that brought down rates. And this year, all these large shippers are going back to the long piece. So it's becoming more of a challenge to go and win that freight and make sure it's the right freight for your company going forward.
I always feel like this is the toughest time, it feels like, if you're bidding either even as a carrier or broker, because your biggest fear is the shipper now sees that they're getting a good deal. Instead of a 6-month RFP, let's kick it out to 12 months. Let's see where this goes. But looking at the right freight, I have, in my opinion, commodities always king, compared to like some beverage customers versus plastics and whatnot. As a broker, is it a commodity driven decision or is it kind of a volume, location, margin? What are some of the biggest things that you think carriers don't think about when they're wondering, well, why is the broker sending me this stuff?
I think it's a mix of several things. One, it's definitely your lanes. What lanes plays best to your company? Secondly, I think it's what solutions are you capable of offering to the customer with your carrier base? And to go back to your original statement, it's always a big question of mine right now is, are shippers pushing rates down too fast? And it doesn't seem that way because, volume continues to be weak. But is there the case that shippers are bringing down their rate hammer too heavy to where that reciprocal cycle starts up sooner rather than having more stable costs longer term?
That's what always felt hard for me was, so I'd be an account executive, you get a lane, you get it repriced, and then if they priced it wrong, they'd say, well, we always bought it at this. This is always how it is. And then next thing you know, you used to have a $1,500 lane you could buy for 12, now you're buying for 13, now you're buying for 14, and you're stuck in this loop. And so I think that a lot of folks, especially drivers, don't understand the concept where as a broker, you have to go down, you have to follow the rails, because if you don't, somebody else will. It's that competitive right now.
Yeah, it's definitely, the brokers, since we're the intermediary, we get blamed a lot for where costs shift up and down from, both sides, the carrier and the shipper side. At the end of the day, we're going into whether it's the spot market or new RFPs, and we're competing against these big asset players. Throughout the pandemic, when rates were, continuing that roller coaster ride upward, a lot of these larger national carriers were moving their fleet to the spot market to take advantage of those high rates. Well, now this year, this RFP season, these asset carriers, these large national fleets are pushing their power units to shippers, which is making it even more difficult to go out and get volume for their smaller and mid-market carriers. It's always a difficult balance without a doubt, but it's a challenge that I think propels why you want to be in this industry, right? It's fun to be working with this supply and demand marketplace. And I think this year is going to really separate us from the past couple years that we've seen in this industry. What grows the partnership with the carriers and shippers? At the end of the day, when you are going into an RFP or even for spot bids, you can't just do the spray and pray method, throw everything at the wall, see what sticks. You have to make sure, to your comment, rates are constantly changing. Unless you actually have a strategy, you have carriers that run that lane that you're building a book of business with several customers on. Is there a reason why you are going at a specific rate? And with all the technology and data points, I think it is making it clear on where as a company you can go and perform the best and have the best bet and mitigate risk on what you're doing.
And looking at carrier strategies now, because I remember one of the craziest things I thought about was, as a broker, generally the spot freight that you see that is posted on a load board is stuff that, and this was how I was told, it's like Arrival, OG Coyote style, where it's like, if we're posting it up, we're wrong. We should have that internal carrier base. We should call our people up. We should have this set up. So for carriers themselves, if I'm looking at a load board, does it behoove me instead to try and figure out, do I run something regularly? And should I try to haggle with somebody to have semi-regular lanes to get back to where I'm typically, my primary customer?
Yeah, I think carriers are learning it the hard way. The carriers that have always depended on load boards or the spot market are learning it the hard way this year on understanding that they need to go build those broker relationships. They need that consistent freight. They need to build partnerships to where when a broker is going to an RFP, they can lean on that carrier. They can lean on, it doesn't have to be long-term pricing agreements, but as a broker, I want to be able to go in confidently to an RFP or a spot bid and understand my cost and ensure that I am continually giving you freight so you can grow your business. We can grow our business as well together for the future. I think the industry as a whole kind of lost that through the pandemic because at the end of the day, everyone was chasing higher rates week after week. And this past year, it's been a flip. It's where can you get that consistent freight at a fair market price?
That's what I'm waiting to see, getting consistent freight. So I worked at a large national asset carrier, 5,000 trucks on the road at the time. When I was an analyst, what's crazy is when we hit patches like this, when the down market comes, the whole purpose becomes fill the bucket. And one thing that I haven't been able to talk to as many people yet is, are we seeing this behavior yet where large asset-based carriers are literally starting to flex that scale and say, well, if I got 5,000 trucks, I'm gonna go to Transfix and say, bro, I can do that like 110. I know the market's like 150. I'm gonna do it at 110 because I just need to fill the bucket. It's Florida. I'm negative 20. Give me all that freight. Are we seeing that behavior yet, or is there an anticipation of where large carriers will really start playing the equivalent of hungry hippos?
I think it's a mix of both, right? We are definitely seeing large asset carriers do that. They are more willing to partner with brokers who have the volume and the consistency to give to them. At the same time, as a broker, we're going into shippers and we're competing against them in that, hungry hippo sense. And furthermore, on the spot market, it becomes extremely difficult to go and navigate the waters on continuing to acquire freight that is positive for your carrier base due to asset and national fleets going so low to ensure that their backhaulls are filled with something. Because at the end of the day, it's better to run with some money coming in rather than running back empty. And with how weak the volumes are right now, assets are willing to go in lower than operating costs to win spot freight and keep their wheels turning.
And kind of looking forward here, let's say I'm a shipper. Looking at a shipper strategy with a carrier, you mentioned a great point earlier, which is you're competing against selling to and also competing against on the RFP front with the same large asset players. What are some of the biggest things that you try to differentiate yourself? Because I remember one of the challenges with a large national carrier is, at least from my experience, you don't really know if your freight's going to get picked up. If I have a 5-truck fleet and I get Bob and I have Bob's number and he's on Macro Point, I know Bob's probably going to get it. But with like a Schneider, Werner, US Express, etc., you're hoping a load planner, what I used to be, would hopefully assign someone to your load. And then if not, even though the market's soft, you may still be in trouble.
Yeah, I completely understand that, because working with large asset carriers, that's always the difficulty a broker has as well. I believe at the end of the day, as a shipper, you always have to diversify. You have to have these large asset carriers that, can give you support, give you power units, give you drop trailers on site. Where a broker really comes in powerful is their service is usually top par if they are operating correctly. We don't rely on one carrier per one lane. We are lining up carriers with shipments. We have a deeper, let's say, pocket of carriers for specific segments of lanes that we are also partnering different shippers up on, diversifying our carrier base with a diverse shipper base. At the same time, I think it's the technology that brokers are able to leverage, understanding how their partners perform. If I was a top asset carrier, we're not necessarily giving ourselves a scorecard. But where brokers are able to roll in is provide different scorecards, give back their carriers metrics on how they're performing, have those communication lines. Hey, you're not performing up to par here. What do we need to work with you and the shipper to go and fix that? And at the end of the day, we have, evolving set of carrier relationships that we can go and continue to grow to fill any gaps that a shipper may have.
And a random question as well. I was thinking about all the technology. Prior to the pandemic, when I started as a broker, a lot of the model was you kind of had to grow really fast, make a whole bunch of phone calls, kind of brute force your method through to gain market share, highly competitive. And then later you said to yourself, well, I got to do technology now. I need to build my own TMS. Like, coming from a digital freight broker as well, is there any kind of things you've noticed on the carrier side where do I still have to pound out the phones if I became a broker, or is there finally technology that makes life easier?
I think it's a mix of both, to be honest. I think there always is that operational relationship that is needed. That's what allows, especially Transfix, to continue to grow with some of these carriers. At the end of the day, the technology is amazing. It creates a large amount of efficiency, which allows us to go and understand our business, our carrier's business more aggressively, so we can go out and acquire the freight to grow our carrier base. But at the same time, carriers are somewhat hesitant on some fronts of technology, and it's completely understandable, right? But we have to be able to provide them the technology and the tools, whether it's data or tracking abilities, but also be able to build that relationship in an operational function where we are actually communicating with them and understanding what their needs are, and then layer on the technology to help grow and create efficiency. So we're both growing together at a positive method.
I think the hardest parts with, especially growing with carriers, is just getting them to use technology. I was very spoiled coming from large asset base. There was already something in place that had been around for a decade or two. You had EDI and all this craziness. But then when you work with these carriers, like 1 to 5 to 10 trucks, like, what's the situation like now? Because back in the day, I remember there was a push to just get even on like Project 44, and they couldn't even figure out how to do an ELD readout. Like, has things gotten better, or have all these new entrants that flooded the market kind of made it more challenging just to figure out like who to pick, who to trust, who to use?
I mean, it definitely got better. 5 years ago, it was difficult just to get a driver's phone number as a broker. Now it's common practice for any driver to usually have multiple apps. I think that is where the problem is. There is a lot of different companies out there that you were partnering with. At the end of the day, I believe that carriers and drivers both enjoy it. I think the one thing that always comes to my mind is, where's their benefit? I don't think they get nearly as much of a benefit as they could with the technology that they are adapting. I believe that shippers also have to go forward and take the data that they are getting, take the benefit from the technology and make changes of their end so it shows more of a benefit to not just carriers, but drivers at the end of the day.
And like, I remember when I came from a startup, AI Fleet, we actually worked with Transfix and y'all on load boards and connections. One of the things I'm curious about is a lot of brokers put a lot of time in the load boards. Do you see more adoption with carriers driving towards it, or given their age and given the kind of traditional demographics of a carrier, is it still something where a lot of folks are just calling in and they're saying, hey, I like this? You know, have we seen more adoption rates as the driver population has changed?
It's definitely getting to be way more common practice to adopt that. But at the same time, that's why I go back to, you can't go all technology. You have to bring that operational expertise in as well. You can't just say, hey, tomorrow we're going to all digital. That is the goal. But I think that at the same point, then you are leaving behind the carrier base that you don't want to leave behind. It's potentially the most experienced carrier base. So it's really, how do you bridge the gap to be able to use things like internal load boards to where it makes it easier and less of a hassle for those carriers and drivers to use? But there has definitely been a significant gain in the usage of load boards.
Random other question as well. I was thinking about this earlier. Chatbots. You know how you can send text messages for alerts and reminders. Has there been any push in trucking? Because if I was like a carrier rep, one thing I would love is to have like a chat bot or chat GPT driven bot to just send out a message and say, hey, Bob, how are you doing? What's your ETA? And I don't have to like do all the extra work. Is there kind of a future in that, or has all this cool stuff that I keep reading about on Twitter still a little ways off before, operationally, it looks like a cool idea?
No, I think there's tons of opportunity with, different AI to come in and play and continue to create efficiency. We've seen huge progress on things like spot quoting or RFP pricing. And to be honest, there's a lot of players out there that are already using, different types of, what you can say, chatbots, not only to communicate with carriers, but also in negotiations. And on the flip side, things like scheduling. Scheduling is a huge pain point for brokers, carriers, and shippers. So I think there's a huge opportunity over the next, 5+ years to really integrate and double down on where AI fits in, but where still that relationship needs to exist.
That's what I was always curious about, because it feels like there's all this data about, imagine I need to schedule an appointment. I've got the load tendered. I need to put my delivery appointment. I feel like there's all this internal data that has not been applied as much to say, hey, on this one lane, you generally put it at 1:30. Well, if you put it at 12:30, we've noticed that this is a lot better. Like, for carrier quality of life as well, regardless of the market, is that the kind of the future goal that you want to get at, to where the predictive analytics itself will recommend this stuff, or maybe automatically do it to where I can save a lot more time and make more calls?
No, I think you hit the nail right on the head. That's exactly where, we as Transfix are going. And, personally, I also want to be able to take those things, because everyone's got a lot of data now. It's been the big push for some years now. But how do we also create a more efficient supply chain as a whole? And what I'm going to go back to drivers getting on apps and tracking or P44. how do we take that info and do something with it on the other end? Instead of just understanding where they are, how do we allow that to go in and shift around appointments to make everything more efficient? I mean, at the end of the day, there's a lot of large shippers out there still, and if a driver is 30 minutes late, they may not be able to deliver that load for 5 days still. And you would think that there is a process out there with all the tools we have, the data we have, that we can eliminate that wasted truck that's sitting there for 5 days, who could be an owner-operator, and ultimately right now, especially in this climate, could put them out of business.
That's what somewhere I read it. I think it was like an ATA, ATRI, or OIDA. They said all it takes is 2 or 3 bad weeks, and then next thing you know, it's like it's all over because of how tight things are. Speaking of how tight things are, whole conversation about market bottom. Are there any pragmatic tips coming from a broker side you can give to carriers, large or small, in order to either maintain relationships or hang on to dear life until things get better?
It goes back to something you said earlier. You have to go and find those broker partners that are going to build a relationship with you, understand your business needs and how they can work parallel together. At the end of the day, if you're a carrier and I cannot fulfill your needs, you shouldn't be working with me as a broker unless you're going to continue to run on the spot market, which is going to be dangerous right now. It's going to be dangerous for the foreseeable future. At the end of the day, you need to go find someone that is willing to understand your business and work out, more strategic solutions that will ultimately allow you to grow and come together. Like, one thing we love to do at Transfix is actually bring our shipper and carriers together to create strategic solutions, because ultimately that leads to a longer term relationship. All three of us combined working to, a single goal. But at the end of the day, what I could say is carriers really have to step back, understand the market dynamics and why they're happening. And it's not easy. It's a lot easily said than done. So you should work with a broker that is willing to go and translate what's happening in the market for you, so you can optimize your business yourself and lean on us if we can support you, but at least have that open conversation so we can provide you info that you may otherwise not have. Because again, I don't have to say it's a difficult time right now for carriers, especially mid and smaller size. So the better relationships you build in difficult times always helps you come out on top.
Well, I think that's the biggest point. A reason I like to have brokerages on my show is because access. If you have 5 trucks, Home Depot won't talk to you. Procter & Gamble won't talk to you. Fortune 100 won't give you the time of day. So, this is such a fragmented industry. You have to be able to work through intermediaries, because otherwise you're not going to get the kind of access to the freight you want. Looking forward, any predictions and stuff coming up near the end of the year, what are some of your thoughts kind of wrapping it up? How do you guys kind of feel like the market's going to go? And do you all have any thoughts or any spicy takes on when we'll either see a pricing floor or if things are going to get better?
Well, I personally do think we're going to see a pricing floor in the next 8 to 12 weeks. But again, within the next 4 weeks, we'll start being able to identify certain lanes or markets. Overall, to be honest, it's going to continue to be a weak environment in the freight industry for the remainder of the year, most likely. Produce season, we're kind of in the beginning of it, but we're not really feeling any pressures. There's been some pressures in parts of Texas and Florida, but nothing really with how much excess capacity we're seeing. And then you go into back to school season, you go into, Q3, Q4 for the holidays. At the end of the day, I'm not someone who, studies the economy, but if the economy is not going to turn around and demand turn up, the only other way that we could start seeing volatility is carriers leaving the industry. It's not something we want to see. It is something that, happens, it used to be that 3-year reciprocal cycle. But at the end of the day, we are starting to see carriers exit. If that continues, that could, bring some volatility later, late Q2, maybe early Q3. But ultimately, I don't think we're going to see any significant shifts in the market for the remainder of the year, most likely, unless something pretty significant happens on the capacity or demand side, which, again, I don't foresee.
Hey, perfect. Well, Justin, appreciate you so much for coming on the show. Folks want to work with Transfix, learn more about it, get in touch. What's the best way to get a hold of y'all?
You could just, you can reach out to us at transfix.io. We also have an amazing podcast called the Transfix Take, where we go weekly and dive into what's happening at the markets. To be honest, I think it's a great way for drivers, carriers, shippers to really understand what we're seeing as a company in the market, as a broker, to help navigate the business forward.
I was on the podcast as well. Highly recommend it. Really awesome stuff. Always happy to promote as well. Knowledge. There's so little of it in this industry sometimes. Every little bit helps. Justin, always a pleasure to get to talk to y'all. Hopefully we'll come on your podcast as well in the near future, but otherwise, excellent time having you on the show.
You're always welcome, Thomas. I appreciate it. You have a great day.
You too. We're going to have a wrap, though, on this show, but you can join Loaded and Rolling live every Tuesday at 1 p.m. Eastern. We also have a newsletter. It goes up Thursday at 2 p.m. Oh, yeah, the live show is 1 p.m. The newsletter is 2 p.m. I need to, synchronize this one day. We'll figure it out eventually. But that's a wrap for this time. Check out the Transfix folks and their take on podcast as well. It is definitely amazing stuff that they have going on. That is a wrap for this show today. But join us next week, folks, because we will do it live.